Hey Daniel, how are you? Welcome
Hey
back. Happy
Dale, how you
thanks.
doing?
Good. Happy Thanksgiving to you, buddy.
Happy Thanksgiving to you too.
Yeah.
Yeah, I can't believe it's another holiday week we have in these markets, and a holiday week, the first we've had in a long time after a big data blackout from the government, right?
Yeah.
You guys were talking through some of those numbers that came out this morning, and we're just starting to get like a view into what a lot of those statistics are, and that's true everywhere you look, whether it's commitment of traders with
Yeah.
in the U.S. futures or our jobs reports and data. We're just getting caught up with where the last several months of these government numbers have been, and markets are, oh boy, they're keen to price that in, aren't they?
Yeah. Pretty wild stuff. I'm wondering what has your attention going into
Ooh,
the end of the year. Grains have had decent performance.
they
We
have,
talked
and
we talked about that 3 months ago before it happened.
we did, and I think I'll share my screens here, folks. I think one of the big things, and we can jump into that agricultural side. So, for those that
Good.
don't know me, I'm a commodities and futures broker with Zaner Ag Hedge or Zaner Financial Services. We help commodity producers and from energy to metals and agriculture help hedge their production. We also help. On the speculative side, retail investors, right, get involved in futures as well. So always reach out to me, if you have questions about futures, what have you. I specialize in agriculture. One of the big things we've been following recently is not only I don't want to call it depression, but it's been a lack of demand in row crop prices. We'll look at that in a second. But the big story of the last several months has been the cattle markets. Everybody has seen how
Yeah.
beef prices have hit headlines. It's become a political story.
Yeah.
We're talking about, at one point, people were talking about shipping animals in from South America on boats, which, by the way, is not economically feasible. The way we take care of the cattle supply issue, which, let's backstory here. Going back to the 1950s, folks, we have the smallest cattle herds in the United States since the 1950s. So, this whole
Wow.
idea that cows and cattle are creating global warming is kind of crazy when you consider the size and the number of animals that we have on this continent is the smallest it's been in the history of the world. And I say that because our cattle herds today don't actually paramount to the natural herds that of bison and things that roamed across the plains. So it's funny to talk about that we have the smallest number of bovine animals on this continent in hundreds, if not thousands of years. And that's a big reason you're seeing cattle prices do what they're doing. So let me get that chart up there and we can take a
So,
look at how
are they
that might
trying
be
to
unwinding.
expand? Are they trying to expand their herds?
Yeah, and that's actually, Dale, the exact right answer to the question, right? Is if you've got this issue, and I've got a 4 hour chart up here, but let's look at the weekly chart of feeder cattle, which for those that are unaware, feeder cattle are the midweight animals that are purchased that are then put, quote unquote, on feed to then become a fat cattle or a live cattle. And that is the finished product that is then butchered and sold to market. And this massive run up we've had in price since basically the COVID lockdowns to our
Yeah.
highs here has been a result of effectively no short slowdown in demand for meat, but
Yeah.
just an ever shrinking herd. And over the last year, when we shut down the border with Mexico, which is where we get a lot of our animals from, physical animals that walk across the border legally and sold to market, are a way that we help, meet those supplies in demand. The problem is we had the screwworm epidemic here over this period, which has kept that border closed and kept those animals from coming into the country. So we've had this tightening, diminishing supply in the herd that there's no good way, folks, to spin up cattle, right? They take
Yeah.
they're just like humans. They take almost a year of gestation, to breed out another animal. You only get one at a time from each birthing cow, and quite frankly, right, you just can't make meat, right? It just doesn't happen. We've tried it. People don't want it. They want the fake stuff. So at the end of the
Yeah.
day, this to me represented on a bigger picture, folks. Gold and cattle represented to me the last hurrah for the inflation trade that we've seen over the last 5 years. It began in row crops during in my opinion, back in the 2000s, actually leading into it. You can look at a chart. If we look at a continuous chart here of soybeans, a great example of where inflation began way back in the pre-2000 era, where we had a similar situation in beans, kind of the opposite of what we have in cattle. We had an oversupplied situation where our one big buyer, China, wasn't participating as much as we'd like. In other words, China buys like 80, 90% of the global production of soybeans. That includes our production. So if China's not buying soybeans, prices are down. And we'll cover how there was a trade around that China news and the China trade deal that is soybeans are the most direct proponent of. But back in 2018 through 19, Trump trade war 1.0, if everybody remembers, soybeans were at the forefront of one of those things that China wasn't buying. All of a sudden, we got a trade deal around. We were coming out of the COVID epidemic, and the world looked okay. Soybean prices went to the moon, literally doubled in price in just two crop seasons. That's a massive move for a product that only one buyer in the world really consumes, China. So this is where inflation, in my humble opinion, began coming out of COVID, was in our row crops. It then rippled into oil during, right, the Russian and Ukrainian crisis. Other markets like our stock markets were continuous beneficiaries of. And then finally, cattle and gold and silver in our precious metals got that last big round of it here coming into 2025. And I think that that's been that last hurrah for the inflation trade. And isn't it interesting that it's all right alongside maybe a turn in the Fed speak, right? Going back to a time of, quantitative tightening or out of a period of tightening and into easing that we're starting to see in the markets.
Okay, so are you implying that you think gold is done?
Yeah, that's the $1 million question, right? I don't know if it's done per se, but I do think we're closer to a top than a bottom. That's easier said than done. But if we look back on this continuous chart, weekly gold, we can see some pretty consolidative price action. Each one of these candles is 1 week. The lines you have at highs and lows is just the highs and lows for the month. So you can look at the monthly and the weekly here all kind of at once. You see this very inside consolidated price action. We're inside on the weeklies and in the monthlies. And if you go down to the daily chart, you can see that we're still inside this range, although in a little bit of an uptrend, right? This
Hmm.
looks like a triangle to me, right? If anything, this looks like a bull flag pattern to start. That doesn't mean it needs to continue higher because, hey, I can go back and show you instances in gold where we had, bull flags that resulted in, were the start of downtrends too. But when we look back on gold on this daily and weekly chart, this type of consolidation we have at highs so far doesn't scream market top just yet. It certainly suggests there's resistance and we've run into a reason that there's been some profit taking, I think. But fundamentally, what has changed, right? What drove gold prices higher? Has any of that changed? Our government hasn't been able to resolve debt issues. We still have ballooning deficits. We still have government shutdowns living our heads. So all of these kind of negative things that, in my opinion, are a reason why people are finding gold as a safe haven and gold is getting its time in the sun finally. None of that's really changed yet. So we see a technical pattern of continuation alongside a fundamental it is still a fundamental shift. I think gold has more upside, but I do think that we've gone parabolic. Silver's gotten its move, which is oftentimes a final, a final precursor to that type of situation as well. And once silver starts to top out, I think it is, that is to me another sign for this precious metals rally because it was the last to go. So it is to me, the final hurrah that still on a weekly chart is putting higher highs and higher lows. Still looks like it wants to go higher, but I do think we're starting to run out of steam and we're going to be finding a top sooner rather than later.
I saw a video on what's happening, the tragic state of farming in Arkansas. And I'm sure that's not the only state, but they said in the video, well, one of the farmers interviewed said that they lost 25% of people that have been generational farmers last year, and
Hmm.
on the verge of another 30% or more this year because of the consolidation of seed companies and fertilizer companies, and they have to take whatever they'll give them for the crops,
Hmm.
the input prices. Do you think it's going to be a good time in the next 12 months to go out and buy some farmland that's distressed because of what has happened to the ag industry?
I do. Unfortunately, like I hate to say, that
Uh,
type of thing. I think
well,
the
that's like, I
combination of,
mean, this is my
right.
imitation of the late great Sam Zell, who was his nickname was Grave Dancer.
Yeah, and I think that's exactly what you're seeing, right? You've got really three major choices in this country to plant. You've got either corn, wheat, or beans. Here's a chart of soybeans. We're coming out of a period where we ran up in prices up to $18, like I talked about, but then
Yeah.
we've otherwise, ran into issues with trade deals with China and have come all the way back down and unwound, back to almost COVID prices. This is your inflation deflation trade 101, right? You start off at a low price, market inflates, and it doesn't quite reach that old low price when it finally pulls back. But that's the nature of row crops in general. The
Yeah.
problem is that if you look at a chart of corn, and now here, or wheat, or I'm sorry, soybeans, here's a chart of corn. You can see a very similar situation of that we can't are coming off of much better prices a few years ago, which means, cash flows being what they were a lot better have now dried up because we're selling a crop at lower prices. And it doesn't matter if it's corn, beans, or wheat here. And I'm showing you all three of those charts. Um, to give
I
you an
also
idea of
heard,
right how times were 50% in terms of price better, right? Just a year ago than where we are now. So you've got a lower price point to sell your end production. You've got interest rates which are still at their highs, and you've got really, really high input costs that haven't come down. That's the other issue with a lot of these things is that many of these headline commodities, their input costs haven't resided much. So how far down
yeah.
can the price come when the input costs are, and you're producing something at a loss, which right now, corn below 420, beans below $11, and wheat below five, probably 550, all represent crops at virtual losses on paper. So we unfortunately also have now farmers that are waiting around for government subsidy into the end of this year because prices are what they are.
You
Um,
know what I heard about those subsidy checks? They
yeah,
don't go to the farmer.
usually not. They don't.
They go to the creditors
The
of the
creditors,
farmer.
the service tech that's fixing up
Right.
your equipment, right?
Right.
That's exactly right. That will free up, some cash flow for farmers, but you're absolutely right. It doesn't go into their piggy bank. That's money that goes right into their operational costs, whether that's at the bank for their financing or that's absolutely right, or fixing a piece of equipment or whatever. And that's true of anywhere you look in commodity space, right?
So is it going
Commodities
to
aren't
be,
free to produce.
yeah, so I mean, we're losing all these farmers, um, besides the big conglomerates, Archer Daniels and a few others.
Which, by the way, have
Who's
had
going to
tough
be
quarters
growing
as
our
well.
food? Who's going to
Yeah,
be growing
ADM
our
actually
food?
laid off, I think I saw 3,000 jobs this last quarter. So
Uh,
those commodity firms are also hurting their bottom lines with prices where they are. They're laying off jobs and closing plants. We heard of I believe it was um, a meat packing facility. Oh, where was it? I think Shutter just closed its doors too. Now that could be for upgrading and what have you, but this is something that's happening across U.S. agriculture, and it is scary because there's one thing that a country can't afford to do. It's unable to, feed its population. We're a unique country, the United States. We are completely food self-sufficient, fruit and fresh water, and technically energy self-sufficient. There aren't really any other countries in the world that can claim that in totality. And that's not something that we can, we can afford to sacrifice.
okay. A lot of the markets, I believe it's all one market, that they all go up
Yeah.
together, different degrees, they all go down together, different degrees, and I think the dollar is a linchpin. Do you have a view on Dixie here?
Perfect segue into the dollar. I do have a view here. Going back on a dollar chart, this is now going a continuous chart on that Dixie, going back to the 1990s, so that folks, if you haven't seen this, before, look at how range bound. Like when we talk about the dollar, I like to joke that, well, we've been here before because you go back far enough, and we really have. Currencies just chop around. It's a race to the bottom. I think we could have a whole nother discussion about how fiat system is designed, to create inflation effectively, and that means that you're going to eventually devalue every fiat currency relative to a basket of goods. All that being said, the Dixie relative to the other basket of currencies in the world seems to be locked in this multi-year kind of stair-stepping trend higher, or was. My big question was back in 2020 or start of 2025, when we broke back below that $100 mark, did we break that uptrend altogether? And this is, a long, or are we still holding, that?
Yeah,
To me, we kind of broke the series of stair-stepping higher, right? Two steps
yeah.
forward, one step back, two steps forward, one step back. Okay, it's three waves back into a trend line support, but I didn't love that we broke below 100 and broke back down into this old range. And this is, again, a chart going back 20 years on the Dixie. So that's, the bigger picture. Bigger, diving a little bit closer here, it looks like a clear three waves down, right? And for all intents and purposes, now the market has rebounded in a pretty constructive structure. Maybe, Elliott waivers could call this nesting. You could call this an expanding leading diagonal. More importantly, I see us getting back above that 18-day, the 55-day, the 100-day, and now the 200-day moving average. I think that's the important thing to talk about. What the dollar's done since September is that we've had an uptrend in the dollar on the daily chart that has broken above a lot of major technical indicators. We
Where
haven't
are
gotten
those
out.
moving
Mhm.
where are those moving averages coming in that were above now?
Yeah, the
98-ish? No, the
uh, the
moving averages, the
which one?
moving average underneath.
Yeah,
The
so the
green
18
and
day
the
here is
green and the
red.
blue. Yeah.
The green and the blue are the 55 and the 100-day. They're at 98.57 and 98.33. 55
Okay.
the green, and the 100-day the blue there. So
Okay.
coming in at about a 50% retracement if you look,
Yeah.
from this low to high. So
Okay.
you've done all this work. The dollar's proven itself. Okay, a little bit of a pullback here to find some support. I hear what you're saying, not unheard of before it heads higher. I do
Yeah.
want to point out on the daily chart, we're not really overbought. We're a little bit more oversold. And when you're oversold above big technical indicators like this
Yeah. It's
and off of
bullish.
lows of the day, right? It's a little
Yeah.
bullish to me. That says we're consolidating up here and we're not done in this leg up yet. But I do think at
Okay.
some point we're gonna, find a little bit of a pullback. But you know, dollar broke down out of a range. It's trying to now break back up into that range.
Yeah.
This kind of looks, I don't know what I just did there, but this kind of looks like we're trying to, find a bottom here for the
Yeah.
dollar, in my humble opinion, on the daily
Okay.
chart. So, you can break
Yeah.
that down to the smaller time frames here, and you can see this little bit of an uptrend, make a case why, there may be a 10-minute chart, a 15-minute chart that wants to head a little lower, but the daily chart to me says the dollar's trying to find a low and maybe starting to trend higher.
Okay. You have a view on the sell-off into last Friday in S&Ps, whether it's corrective, has the correction played out and we're going to new highs, or is the market still vulnerable?
Yeah, weekly chart of the S&P cash here. Going back to basically 1932 low, real quick, just kind of flash forwarding through stuff. We saw this
I
big
had a rough
sideways.
year. I had a very rough year in 32. Go
The
ahead. Go ahead, buddy.
the 70s where we had headed sideways. I like to to compare this 1970s recession and sideways price action in the S&P between 120 and 60 to the very similar 2000s between 120, 1600 and
Yeah.
600. Then you break out. So what do we do back then? You break out. Here's Black Monday. Here's your rally up after Black Monday. Here's the
Yeah.
booming explosion of the 1990s, which in my heart of hearts, I want to believe is where we're heading, or in the midst of. And here when you line up some of those analogs, you can see how similar we are. This pullback here in April through July of 2025 is a little different. We didn't have something that steep back, in the 90s, but okay, whatever. You found support right in old highs. It was a 50%
Yeah.
pullback of this swing, and you've headed up to, negative 23.6% targets. In other words, two steps forward, one step back, two steps forward. So the question is, now that we've satisfied a lot of upside technical targets from some of these run-ups, you've got upward sloping trend lines against the lows, and you got really a weekly chart that we just took out last week's high. I mean, that's not necessarily bearish. Yet last week's close was ugly. This week so far, in holiday trade, however, right, we've been able to go and take out last week's high. If we reverse this on the S&P and you get down below last week's low, and
Oh
it's an
yeah.
outside week lower, it looks ugly. It is holiday trade, however. So I will say this. I think between 6,500 and 6,900 in the S&P, you've got a 400-point range that it's probably going to carve out in for a bit here. I still
Mm.
see this in a weekly uptrend, however. On that daily chart, we'll see today and how we open. I think markets are, yeah, we're up 100 and something in the Nasdaq right now in the futures. Let's just pull up the futures now in the S&P. No sense in not looking at the short term there real quick. Yeah, and you're still through to a new high there. You've got a bit of a downward sloping trend line, which on the S&P, this market tends to like to hold on these bigger corrections. But I can go back in history and show a lot of charts like this of how it's just a correction and a stopping point before we find new all-time highs.
All right, Daniel. People that have an interest in trading futures and other markets, ags, and things that you specialize, best way
Yeah,
for them to get in touch with you.
you can find us right here at Zaner.com. If you really want to find me, go over to About Us, over to the Ag Hedge side. You can learn all about me and my team there. But Zaner and Zaner Ag Hedge, best place to find me. You can find me, of course, at Dan SOTD on Facebook, Daniel Hussey Jr. on Twitter. And thanks for having me, Dale.
Have a great holiday, my trading
You
warrior
too, everybody.
brother.
Happy Thanksgiving, everyone. And we'll be back with you next quarter.
See you next year, buddy.
Take care,
Have
everyone.
a great trading season into the end of the year, bro.
You too, everyone. Bye.
All right. Thank you. All right. So everyone, don't just count your bushels, count your blessings. Have a great, well, I'll probably see you Friday. Happy Turkey Day, Forex gal. And really a good time if you haven't to get in the chat room. I wonder what Blake's doing in USD Max here. I'll have to go check it out. Anyway, maybe I'll see you Friday. Thank you, Laura. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.